What I'm saying is that your ability to get 22 to 25% of the calculation, you have passed. Your ability to get 22 to 25% of the calculation, you have passed this course. And it is being time bound, okay? We will do, last day, we will do time management. That will really help us to solve issues. Time management is of essence, okay? If you are spending more than 1.5 hours on the calculation, it means that you are failing. The paper is for 3 hours. And if you are spending more than 1.5 hours on only 20 marks question, then it means you are failing. So whilst working through, you will try and deduce some strategies that will help us to solve all the calculation questions in the space of time. Those writing this paper for the first time, those writing this paper for the second time, maybe it will be time management or other issues. But I pray that when you are done working through these issues, you'll be fine. You didn't say amen to that. You didn't say amen to that.
Amen.
Amen.
Okay. So, brothers and sisters, we're going to start the theory part of the calculation tonight. We are going to finish the theory part of the calculation tonight. So tomorrow, we are going to start with the questions I shared with you. We are going to walk through all the questions I shared with you. And I promised that I said I will solve how many questions?
12.
I said 12, not 9.
You said 12.
12.
I heard 13.
Okay. If I said 12, then I will go by that. But we need to include some of the Saturdays. Okay, Saturday morning. I hope it's fair. I hope it's fair.
Yes.
Okay.
Yes, Mama.
Okay, so let's start now. Let's conclude the. My video is on. Let me go. Okay, so let's conclude on the. I'm going to use only 30 minutes to conclude on this. Okay, that's the area that dropped last night. Okay, that's the area that dropped last night. So I'll use only 30 minutes to do that. Then we close on that. Then we start the theory part of the calculation. Okay. So last week we got to, we concluded on challenges of what the PPP, right? The challenges. Okay, so let's start with public partnership. Remember the first day when I came, I told you that what is the difference between, yes, there's a model, a cancer. Okay, so when I came the first day, I said that what is the difference between a public sector entity and an NGO? And I remember, I don't know the person, but I remember that someone saying because of control, because of issue. Do you remember that issue? Do you remember? Do you remember?
Yes, yes.
Okay, so now we are going to take it from this angle or this tangent. Public. The first one we did was what? Private, public. Here lies the case, a public institution collaborating with a private institution to share 4R. What is the 4R? What is the 4R?
Resources, risk, reward, the third one.
Responsibility.
Mm-hmm.
Rewards.
Mm-hmm. The 4R. Mm-hmm. Resources, reward, responsibility, and what? And risk, exactly. So to share this element, but the fundamental element is what? The risk. We need to make sure that the public institution maximize or the optimal maximization of what? Risk. transfer of risk to the private person. And we said that the private person is not what Father Christmas. He's also in for what? For business. Okay, but when it comes to this, listen carefully, is whereby a public institution, one public institution collaborates with what? A public institution, okay, to build an asset. So here, in between here, we have an asset. Again, a public institution also collaborates with what? An NGO to also build an asset. That is what PP. This one is called, this is not a PPP. This one we call it PUP. Is that clear? Is that clear? Are you catching a revelation before I heat up? What we are saying is that a public institution, this is a public institution, collaborating with what? Another public institution or an NGO to what? To produce or to provide what? An asset. Is that clear? Is that clear? Can I build on? A yes will be fine with me.
Yes.
Yes.
Yes, go ahead.
Okay. Another yes will also be fine with me.
Yes, Samantha.
Yes.
Okay. Thank you very much. So basically, that is the fundamental elements when it comes to this. So name them. Public institution can collaborate with another public institution to do such activities. When you get to procurement, it will also open up issues whereby, let's say, have you seen, would this one be a service concession? Have you seen the COVID institution? When COVID came, those traveling, the airport institution contacted, was it Noguchi to do those COVID test for them? Can we classify that one as a PUP? Can we classify that one as a PUP? Can we classify that one as a PUP?
If Noguchi and Ghana Airport collaborate, it's a PUP, but as to whether the example you are giving, because I know it was a private organization that did that.
Oh, really?
Yeah.
Okay. So basically, that is the fundamental activity. But their main motive supposed to be that it's supposed to enhance what? Public what? Services. Is that clear? That is supposed to be their main motive. The reason why collaborating with NGO is still under PUP is that these people also behave as what? A public institution. Why? Because they have the mindset of not what? Making what? Not making what? Profits. Is that clear? Is that clear?
Yes.
Yes, sir.
So the next question I wanted you to ask me is that, so here, since it's public institution, are they transferring risk? Are they transferring risk? No one is asking me, so let me ask you.
Sharing.
Huh?
They are sharing.
They are sharing risk, eh? In what
Yes.
sense?
Because they are both public.
Okay, very well. So that would be the main motive. They are all trying to avoid what? Risk. Here, they are not sharing and they are not transferring. They are trying to avoid what? Risk. In a sense that, how do they avoid risk? For them, they will do the thing themselves. So if risk will pop up, it will be shared between these two people. And eventually, they will avoid what? Risk. Is that clear? Okay. They can also transfer costs between themselves. Is that clear? Okay. In a sense that if the private person will leverage on what? Government to also boost his business, these people will transfer costs from one said entity to the other, basically. Is that clear? Very well. Let's discuss the objective of PUP. So what would be the objective? You remember that I told you that objective is our specific intention. Is that clear? So what would be the specific intention of we doing PUP? Who can tell me? Give me one. First one, they are in to train and develop what? Human resource. HR. Is that clear? Is that clear? In the form of we collaborating, okay, let's say this company, University of Ghana, right? Okay, collaborate with, let's say, UDS. In the form of collaboration, they can train staff, they can develop what the human capacity in the form of what they providing what service. Is that clear? Is that clear?
Yes.
Yes.
Okay, the next one is also what? They improve efficiency and building of what? Institutional capacity. Institutional capacity. How do they build institutional capacity? If these two people come up, pull forces together, okay, facilitation of a certain project will be what will be faster, okay, and the capacity in terms of, let's say, if University of Ghana is not having the capacity to do that said activity, if collaboration comes in, they will have what the prerequisite what capacity to build the said what activity. Is that clear? It improves participation. Name them. It improves what? Participation and collaboration of between what? Public players. Okay. Participation and collaboration of what? Public players. Is that clear? So that it will help promote what? Promote what? Efficiency or the value for money aspects. Is that clear? So basically, this will be the objective. You can name them. If two people comes to two public institutions or an NGO pulls forces to with what a public institution to develop what said assets. Is that clear? Any questions so far? Any question?
I want to plead with Baba if you could share with us some
Experience, eh?
Examples regarding
Okay. I think
you see, generally, I am skeptical about the nature of our NGOs because they appear as NGO, but before I realize that they are under the umbrella of one party or the other.
okay.
Before they can get the good face of maybe the sitting government.
Okay. But do you know that when it comes to law, okay, an NGO, company limited by guarantee, that is an NGO.
Yeah.
They can't switch to company limited by liability. You know that?
Yeah. Yes.
Do you know that? Why?
Yes,
Why is that they can't switch per law?
Yeah, the law.
Yeah, so in that tangent, they're trying to seek the good. Okay, I think so. So that subscription and investment can also come. That one is
Yeah.
okay. So let's make a
It's
head.
not like our private sector. This exists by name.
Okay. 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 So let's make a headway. We have forms of what? PUP. What are the forms of PUP? We have two forms of PUP. The first one is public to public partnership. Is that clear? To public partnership. The second one is public to non-governmental governmental organizations partnership. So these are the two forms. So if you are asked, that state the two forms of what? Partnership. That is the PUP. The first one is public to public what? partnership, and public to what non-governmental, what organized, what NGO. So we have elaborated on them, whereby for the first one, two public institutions coming together. Let's say University of Ghana coming together with private that. Okay, someone is asking the full meaning of PUP. PUP is public partnership. That is PUP. Exactly. So going forward, if you see PUP, that is PUP. Exactly. Watch this. Is that my brother? Is that my brother Isian? Okay, Isian. Let's move on. So basically, that is what PUP. The first form is what two public institutions coming together, okay, to provide any service or any research. So University of Ghana can also move together with. Yes, please, I'm sharing the screen. Oh. Baby, now I can't see my screen. Please, can you see my screen?
Yes.
Okay, so baby, now just go off and come in. You'll be fine. So basically, that is what PUP public.
Yeah, on my it's a brother. Okay, I'm here.
Okay, let's move on. So
I'm here. Okay.
Okay, so let's move on. The next one is what an NGO moving together with a public institution. Let's say in a community base. Let's say a public institution can come together with a private institution to build, let's say, water for let's say this community. Okay, so Ghana Water Service or Ghana Service of Ghana Water Company Limited, right, can be together with an NGO to build water for a certain community. A whole lot. They can even come together to share sanitary pad. Those in the rural areas, they can come together, share sanitary pads and the rest. Is that clear? Basically, these are them coming together to provide services or to provide any assets. If no other questions, let's use 10 minutes to walk through the advantage of what PUP. I'll talk about only two of them. Then we close the chapter on that. Then we do how we account for PPP. Okay, so advantage. So can I get views? What would be the advantage of PUP? Can I get one from your end?
I think it avoids duplication of efforts.
Yeah, avoid duplication
by the public sector. But at times you can see some MDAs who are into somewhat common activities. Then this person will be doing this person will be doing that without collaboration. They will save some resources if they have collaborated, and also maybe benefit from the advantage that you have gotten from the synergic effect.
Okay, so we have numerous of them, or we have a number, but let's talk about these few ones and we jump. Okay, non-commercial relationship, because it's between NGO and public institution or public. Okay, there is no connection of what commercial relationship, because remember these people have the motive not to make profits. So there is no commercial relationship. But when it comes to the PPP, there is what a level of what commercial relationship. Is that clear? Is that clear? Is that clear?
Yes.
Yes.
The next one is what? Transparency. Eric, your hand is up. What is your question? Transparency and accountability. Okay, is enhanced. It says transparency is enhanced. What makes transparency enhanced? the virtue of the fact that they are not making any profits. Okay, so there won't be any secret what trade. Is that clear? There won't be any secret what trade because we are in not to make profit. So why do you do any secret what trade? There won't be any secret. So transparency, comprehensiveness of what information will be achieved. That's transparency. And accountability will be at the peak because we won't do any secret what? Any secret trade, okay, among the parties because we are in not to make profit. We are in to provide service or what? An asset. Is that clear? There will be also be what? A lower transaction cost. Transaction cost. What is this? Transaction cost in the sense that there won't be a lot of cost because we are not to make profit. So we'll make sure that transaction costs, administration costs will be lower because we are in not to make profit. And since we are not in to make profit, all these issues will be geared towards what? We achieving value for money, minimizing cost. Do you remember minimizing cost? We make sure that we minimize what? Cost. Is that clear? Is that clear? Okay. So basically, you have a number of them. This will be some of the advantages. Read around those issues and you'll be fine. Any question? Any question?
And Oman, can there be transfer of knowledge here?
Yes, yes. That is the objective. This objective can be turned to, yes, it can be turned to advantage.
Okay.
It can also create employment. Can't you see that?
Yeah.
Can't you see that?
Yes,
Yeah,
yes,
it
yes.
can.
It's possible.
Okay. So name them. The
Yeah.
advantages there, plenty. Exactly. As I told you that in exams, we use 3 methods to answer any exams question. Do you remember? I told you. I know. I don't know. And the last one is what? The last one is what?
Use your mind.
Yes, discretion. Is that clear? But in
Yeah.
ICAG, if you don't know, can I write something? Is that clear?
Write something. Okay.
Yes. Don't leave the paper blank. Write something. Okay. I've really controlled time. So let's use the next 30 minutes to walk through how we account for PPP. That was the question that dropped. They are not going to ask you, when it comes to this area, they are not going to ask you any chenchina and chimpim. It's about theory, accounting for PPP, that is public-private partnership. This question dropped August 2022, and last night they were asked to explain some issues under PPP for 4 marks. So last night it was, they listed the principles of what PPP for you to explain, and for 6 marks, and they added this area for you to also explain for another 4 marks. JM, your hand is up. What is your question? JM, your hand is up. What is your question?
Please, I don't have a question, but a lot of videos are on. They are distracting my screen. Hello.
Okay.
But the videos are not showing. No, I don't know. Those videos are not showing.
Minimize it. You can minimize it.
Okay, so let me use this opportunity to off them. Okay.
But I can't even see those videos. I can only see your man playing this video.
It will affect you, but it will affect others. That's why the video crown, if you on it, it will make the recording very huge if you are playing back. Welbeck, your video is on. I'm trying to off it, but because I'm using a write-up, I can't off it from my end.
You know, sometimes when you join, the moment you join, the video and the audio will be on, so you have to put it off. So I can see some people have joined just in the past 2 minutes or so. Okay,
let's make a headway. So how do we account? Listen carefully. How do we account for PPP? This standard IPSAS 32. Okay, we call this standard. Okay, IPSAS service concession. concession for, how do you pronounce this word? Is it grantor or grantor?
Grantor.
Okay, so this standard is not based on any IFRS. Most of the IPSAS standards are based on IFRS, but this standard is not based on any IFRS. And in some jurisdictions, or let's say we accounting for PPP, that is public-private partnership, is sometimes referred to as service concession. And how do service concession operate? Service concession of this standard examines transactions only, listen carefully, it examines transactions only from the grantor's, okay, perception. Is that clear? Is that clear?
Yes.
And I will explain the grantor, don't worry. And if there's supposed to be any recognition, that recognition from, we have this also, operator. The operator's accounting supposed to be geared towards IFRS. Now for the grantor or the grantor, is supposed to be catered for under what? IPSAS what? 32. Is that clear? Is that clear?
Okay.
Okay. This
No,
can,
please.
is not clear.
Yes.
Okay, so let me explain this before. Let me explain this. When you say grantor or grantor, is the entity, so that you get it, the entity that grants the rights, okay, to use, the right to use the service concession. The service concession. Concession to the operator. Is that clear? And who is the operator? Before I come back and explain that. Operator. Operator is also the entity, is the opposite of the grantor, exactly. The entity that uses the service concession. That's right. They can ask you to explain these issues. Okay, that service concession. They can ask you to explain them. Service concession. Service concession assets. Okay, to provide public assets, public service, subject to the grantor, okay, grantor's control. Okay, so let me try and explain the first one. The grantor, okay, most of the times are the government. Okay, most of the times are the government that grants the rights to use the service concession to the grantor. The grantor can be the private person that we have granted the service to, okay, to use. Is that clear? Do you get it from this angle? Do you get it from this angle?
Yes.
Okay.
Yes, please.
If you get it from this angle, so let me explain the treatment. The transactions or the accounting is done for only under this IPSAS. The calculation or the accounting is done for the grantor. Is that clear? For the operator, who is the, let's say, a private person, he will use IFRS. Is that clear?
Okay.
Is that clear?
Yes.
Okay. If it's clear, then what is the service concession agreement itself? When you say service concession agreement, they can ask you to explain all this because go and check last night's question. They were asked to just explain keke. When I check that, and I'm not going to take that part. You are going to read it yourself. Okay. I'm not going to waste time on that. It's a binding arrangement. It's a binding arrangement between a grantor or grantor and
The operator.
the operator. And the operator, in which they have an assumptions, in which one, the operator uses what? The service of what? The concession what? Asset. Is that clear? To provide service on behalf of what? The grantor. Or the operator compensates for its service over the period of what? Time. It's two things. The agreement is that one supposed to, okay, use an asset, and the other supposed to be compensated for what? The service he provides on behalf of what? The grantor. So these are the three key definitions you need to know. The grantor and the accounting treatment. The accounting, when it comes to this IPSAS, the accounting treatment is for who? Is for who?
It's for the grantor.
Grantor.
Okay, but for the private person or the operator, is supposed to account same under what? Under
IFRS.
Listen carefully. This standard do not cover service and maintenance arrangement. Listen carefully. This standard do not cover service and maintenance arrangements in which the assets are not controlled by the grantor. Listen carefully. Let me explain this part. They have released the asset to the operator. And since they have released the assets to the operator, it's not in the capacity of the grantor to maintain and service the assets. Is that clear?
Okay.
Is in the bosom of who? The operator to service everything.
Okay.
Okay. This is the basis. Can I push? If you are cutting
Yeah.
the basis, push.
Can you come on with the treatment again?
The treatment, I said that the treatment, the transaction covers only, it is being done by the grantor. Okay. For the operator, you need to do it in your books as a private person. Is that clear?
Yeah, it is.
Okay. Let's move on. Upon this basis, someone will also ask, what is the meaning of what? The service asset. So let's define a service. I'm taking my time to walk you through this aspect. They haven't dropped questions around this area, but the other areas they have dropped questions around. Okay. For you to explain.
Concession arrangement definition in which that it doesn't complete.
No. It doesn't end there. They have some assumptions that continues, and I mentioned them. The assumptions was that the operator supposed to use the concession with assets to provide service. The operator needs to be compensated for its service rendered over a period of time. So if he's not using the asset and is providing service, he needs to be compensated. Is that clear? Is that clear?
Okay.
Okay.
Okay, sir.
To consult the ICAG manual, that is the basis we are using, okay, to catch the revelation of the rest. What is the concession asset? It's an asset.
Okay.
Yes, please.
The service concession, I thought you said it's a binding arrangement between the grantor and operator.
Yes.
And that the operator uses the asset and the grantor is to be compensated for the service.
No, the first one is that arrangement. The operator uses the service concession asset to provide a service on behalf of what? The grantor.
Yes.
The second assumption is that the operator is compensated for its service over a period of time. Okay.
Okay.
The reason why we are compensating him is that he's not using the assets.
Okay.
Is that clear? Yes. Okay.
Thank you.
You're welcome. Is that Amma? Because if someone says or said, then that person is a OG. Is that Amma?
Yes, please.
Okay. Let's move on. What is a the asset itself. The asset is an asset used to provide, provide what? Provide what? Public what?
Services.
Services. Okay. Under, listen carefully, under the concession what? SCA. You know SCA? You know SCA?
Yes.
Service concession.
Concession agreement.
Arrangement. Very carefully.
Arrangement.
That is some of the definition. The last one I need to talk about under the definition, we call it whole year, a wholly off life. And I am on as a wholly off life. Okay. What is that? It's also part of the assets. Okay. It's an asset. Way back in masters, they gave us some chemistry, how an asset will be provided, and if the asset is provided and they lease the assets to the enema basebi. Is that clear? It was all based on this IPSAS 32. So an asset is used in a service concession agreement for its entire life, its entire useful life. So if an asset is being provided and is being used for its entire useful life, it becomes what? A whole of life what asset. Is that clear? Is that clear?
Okay.
Okay.
Yes.
If it's clear, brothers and sisters, let me use this opportunity to walk you through the recognition of that. But I'm not going to talk about the models of what recognition of liability and the financial liability model and the revenue. Please, you are going to read, and the disclosure. Please go and read for me, I beg. If you have any issues, just revert. That was the question that dropped last night. If you have any question, just revert. I hope it's fair.
Okay. Right, it's okay.
If it's fair, let me do the recognition of what? Service concession. So recognition of recognition and measurement of. What is recognition? And a conceptual framework, what do we say recognition is? We have done this, so what do you say recognition is? Not answers it back. What is recognition? What is recognition? I don't want to mention names. What is recognition? Shika. Baby na. Shika. Ama. Prof.
Aman.
What is recognition? When you say we are
to incorporate.
Recognition.
The person talk to me.
This is how a business transaction is recorded in the accounting records.
Someone was saying something, man.
To incorporate or include an amount on the face of the financial statement.
Okay, very well. What is measurement? Don't go away. Counterpart.
Measurement.
Measurement is attaching a numerical value or value to the asset or liability in the financial statement.
Okay. So measurement is trying to attach a monetary value. Okay. And recognition is we trying to include an amount which is measured on the face of what? The financials, the appropriate face of what? The financials. Okay, so let me take it from this angle. We are still recognizing IPSAS 32. How do you recognize IPSAS 32? Listen carefully. I said the accounting is done by which person? The accounting is done by which person?
The guarantor.
So let me confuse you here. So the recognition, that's why I said, what is the meaning of recognition? So the recognition is either done by the operator or the grantor. Is that clear? Recognition is either done by who? The two.
The operator or the guarantor.
Why? Because we are trying to incorporate or include. So it can be done by this person, it can be done by this person. But this person uses what? And this person. Is that clear?
Mm-hmm. Can you turn off the videos? There's one Joe and Mavis. I think their video is on it.
Those people, I think they have joined and put the distance somewhere. That's why Yakasa Mountain. Okay, Prof, you called me. What is your question?
I wanted to ask, so between the operator and then the grantor, who recognize the legality of the asset?
The asset supposed to come from here. We are not interested in the operator's recognition. We are interested in whose recognition? The grantor.
The grantor.
Releasing the asset to third people. Is that clear?
Okay.
Okay. Okay. We can also say that we are still recognizing when the operator, okay, has also constructed the asset himself, developed the asset himself, or acquired the asset from a third party. Listen carefully. When the operator constructs, develop, or acquire the assets from a third party, okay, you can, let's say, purchase the asset from a Mampenyi. Listen carefully. When he developed, acquired the assets, listen carefully, from a third party, okay, to provide service under, he has constructed himself and to provide service under, to provide, let's say, service under the public space, or under the service that, what are we going to do to this person? Who can tell me?
I think we'll compensate for the service.
Okay. Basically, we need to compensate for the service.
Please, the last statement under publish.
Under
service concession agreement.
It means we just joined. Okay. Or when it comes to the grantor can also, okay, have an existing asset already. Then that asset will be upgraded. Is that clear? And be given to who? The operator. Is that clear? To provide what? Service. Is that clear? So these are the two ways. The operator can construct his own asset, can develop, acquire. The grantor can also either have the asset already, giving the asset to the operator to operate with, or the asset to be existing already, he can upgrade it. Then he'll give the asset to the guy.
Hello,
Okay.
sir.
Yes, please.
Please, the grantor, kindly go over it more for me. I didn't get that part.
The grantor can have an asset. Do you know grantor? Grantor is the government too. Is that clear?
Yes.
Yes.
Yes,
He can
sir.
have an asset already. Then he will just upgrade, like renovation. He can renovate the asset and give the asset to the operator to provide service for. Is that clear? Is that clear?
Yes, sir.
Okay. Examples of service.
Yes, sir.
Who can give me some examples of service concession? Examples.
Road.
Okay, road. They can build roads, bridges,
hospitals,
prisons, hospitals. So do you remember Pentecost built a prison for Ghana Prison Service?
Yes.
Okay. All these issues, whether tangible or intangible assets, they are all supposed to be accounted under what? Service concession. I've taken my time. Let's move on. How do we do the recognition? Recognition is supposed to be done in two folds. Recognition. We are still under recognition. Okay. So Tina, speak to me. Tina, just speak. Tina.
Yeah, man, I'm here.
Okay, so you are the co-host now. Okay. So what will be the recognition? We are still under recognition. Okay, recognition. Recognition can be done in two folds. The first one is what? The initial recognition. And what is the next one? Subsequent what? Recognition. What is the initial recognition? We are saying that they are interested in what? You are interested in what? You are interested in the grantor. So how do the grantor recognize the first one? Yes, if the grantor, okay, has provided the assets. Do you remember that I said that it's either he provides an asset already or an existing asset. So if he has provided an asset or he has upgraded existing assets, okay, if one, the grantor, the initial recognition, the grantor, okay, controls, he controls the asset or regulates, okay, the assets, okay, provided for that he controls, regulates the assets of what? The assets. But he has given the right to who? The operator to operate. Okay. Operate. To whom, let's say they provide them the price they need to use for the asset. You remember the PDS arrangement? The PDS ECG arrangement. It's also part of what concerns service concession. Is that clear? So here, the operator is supposed to control. If you want to recognize, you're supposed to control and regulate what? The assets. Two, if you can recognize at the initial cost, you, the grantor, you're supposed to also control through what? Ownership. You're supposed to also have what? Benefit to what? Entitlement. Beneficial what? Entitlement. Supposed to also have a beneficial what? Entitlement or otherwise. Okay. After any significant residual value, and you know residual value, is that clear? Very well. So if such activity is done, then recognition will be under the PSAS what? 32. Is that clear?
Yes.
Is that clear?
Yeah.
Okay. Okay. If so, upon the subsequent recognition, the assets will be reclassified. Listen carefully. After the initial recognition, the assets will be what? Reclassified. Okay. And accounted for separately. So upon accountability separately, it's supposed to be accounted for under PSAS 17 or PSAS 31. Do you know PSAS 17? Do you know PSAS 17?
Yes, PPP.
PSAS 17 is PPP.
PPE or PPP?
PPP. What of IPSAS 31? Huh?
Intangible assets.
Okay, so intangible assets. Okay, so it's either after the first recognition, you are going to reclassify the assets. Upon reclassification, it won't go under IPSAS 32 again. It will go under where? It will go under IPSAS 17 or IPSAS 31. Is that clear? So the subsequent recognition will be done under the said activity. Is that clear? Is that clear? Okay.
Yes, please.
We are going to do it separately. We are going to do it separately upon reclassification. Okay. When it's done that way, we're supposed to also, we are done with what? Measurement of what? The assets. Recognition of what? Assets. And measurement of the assets. Recognition and measurement. Why are we going to also measure the liability? Yes, please.
Okay, so I want us to look at the PDS arrangement. So let's say ECG owns the transformers that transmit the power. PDS comes. So in this case, at first recognition, ECG uses IPSAS 32, or even before PDS came, I'm sure they should be doing IPSAS 17. Then PDS comes. That will be a subsequent recognition.
Okay. The reason why I don't want to comment much on the PDS, that's because ECG is government enterprise something. They don't use IPSAS.
Okay.
They use IFRS in their preparation of the financials. So the arrangement itself is a service concession, okay, but the accountability of the said activity won't be geared towards what service concession. Is that clear? Because these people are using ECG is using that, but let's say that, let's use the same example, okay, but not using, let's say, ECG. Let's say any government entity, private person coming in, but they are trying to do, let's say, government of Ghana. So use government of Ghana and the hostels, the TDF hostels. Okay. Okay, boss.
Okay.
So here, at first, they are using their destiny already, their IPSAS 17 already for recognition of what? That. And the IPSAS, they haven't totally implemented it. Is that clear? It's only the universities. The last time I checked, only the universities are totally implemented because they are an institution and they are teaching that, so they can implement it very well. That's why they are using it. For some of them, they don't use it at all. Is that clear? So they are using their IPSAS 17 already, but you came in for the arrangement. They have released the asset to you. So upon the release of the asset to you to use to provide service, their first recognition will be under IPSAS 32. The subsequent recognition, the private institution needs to what? Reclassify the asset again. Upon reclassification, the asset is supposed to be, if it's a tangible asset, it's supposed to be calculated or supposed to be recognized. Subsequent recognition is supposed to be under what? Under IPSAS 31. Okay. If it's tangible asset, recognition is supposed to be under what? IPSAS 17. Is that clear? Boss, is that clear?
Yes, sir.
Okay. I always love to use marriage as an example. Okay. If I married under IPSAS 32, I was single already. So if I marry under IPSAS 32, and now we are doing subsequent recognition, it means that they are taking the lady away. So since they are taking the lady away, we need to do reclassification. Take the lady away, and I'll go back to my actual recognition. Is that clear? Me being single, buying food outside, buying Indomies, buying this, okay, because I can't cook. You get it, basically. And within some space of time, you get typhoid. Okay. So that is that. Okay, Henrietta is saying that, please, can you go over the recognition? The recognition, we are saying that the recognition and measurement will be done by the grantor. And the first recognition, initial, you're supposed to have control, the assets, you're supposed to have control over the asset. You have just given only rights. You are just giving only rights. You are not giving total control. You have just given right to use. Is that clear? So the right to use you have given, you're supposed to control the assets, regulate the assets. Before you can do what? Initial recognition. You're supposed to have ownership, beneficial entitlement, and any other before you can do initial recognition. After the initial recognition, you need to reclassify the assets because you classify the asset under PSAF. Classify the asset again and bring the asset under PSAF 17, which is your PP. PP, on our way asset ankasa. If it's intangible to, it will be what PSAF 30, what 31, which is what IAS 38 and what IAS 16. Is that clear, Henrietta? Is that clear? Okay, if it's clear, let's move on. How do you recognize the liability? I will end this one here. The rest of the recognition and commitment, we are going to do that because the first recognition will be done for sin. The other recognition will go to the actual standard. Is that clear? It will go to the actual standard. So let's say liability. The first liability will be done, the initial one will be done under what? That the second liability will be done under what? PSAF 19, contingent provisions, contingent liability, and what? Assets. Is that clear? Is that clear?
Yes, sir.
Okay, so let's do one time. Just take your time. We just read through. Get the basis. Is that clear? Okay. Treating accounting in some way. Accounting standards are some way. So get the Nema is home. We are saying that it's attached to the first recognition. You're supposed to have control, Subsequent recognition, supposed to reclassify, get those bases. Is that clear? Is that clear?
Yes.
Okay.
Yes.
Please, can you go back the liability one?
I'm now doing the liability.
Okay.
Okay. So how do we do the recognition? The recognition will be done on the assets. The recognition will be done on what? Fair value. Is that clear? Is that clear? Is that clear?
Okay.
The first recognition will be done at
Yes.
fair value. The fair recognition should be done at the fair value. And we know fair value. But if the assets in the books, do you remember that I said that they were first treating the asset under what? PSAF what? PSAF 17, is that clear? So yes. If first they were treating it at PSAF 17, and now they don't have fair value, but they have the carrying amount of what? Carried amount of the assets. You can use the carried amount of the assets. Is that clear? Is that clear? Hello?
So we're doing liability.
No, I'm talking about the assets.
Okay, then that's fine.
The assets. It can be done if we don't have any carrying amounts under the PSAF 17. Before we moving into the concession, use the carrying amount. But if there is no carrying amount, use the fair value. You said you are confused. Why are you confused? Let me bring you. Talk to me. Don't type.
I think it's with the initial recognition.
Yes, you said the initial recognition is 32. Now I'm hearing 17.
Carrying amount.
I'm saying that the initial recognition is what? 32. The subsequent ones are 70 and 31. But what I'm saying is that what will be the value that you are going to use? So let's say a company is giving a car, a public company is giving a car to a company to run for this service. What will be the value we are going to attach? Measurement. Maybe now do you get it? The amount is either we use fair value or the carrying amount under the IPSAS 17. Is that clear?
Yeah.
Or you are still confused?
I'm okay.
Okay.
Thank you.
You're welcome. So let's continue. The recognition. How do you do the recognition under liability? The service concession will create, and as we have created an asset already. Okay. So upon creating the asset, they're supposed to have a corresponding with liability. Is that clear? Is that clear? Hello?
Yes.
Is that clear? So
yes, we can hear
having a
you.
corresponding liability. What will be the corresponding liability? The corresponding liability will come from the contractor. Do you remember that I said that the contractor can also do what? Can also what? Can also what? Provide what? Hello, can
The
also
asset.
provide what?
The asset.
To provide service. So upon providing the service, what will be the payment you are going to pay to the contractor for the service that he used to provide? You compensate what him. Is that clear? So the compensation becomes what? The liability to what? To the grantor.
The grantor, okay.
You are not interested in the operator's activity. But here lies the case. He has created, or he has what? Created and developed an asset to render public service. Is that clear?
Yes.
Okay. So if he has created an asset, so here, liability will come in. When is the operator who constructed the asset? Is that clear?
Yeah.
Or developed the asset. So now it's not your assets, it's your what? You are going to compensate this man. Is that clear?
Okay.
Is that clear?
Yes.
Okay. So since this man, let's say a private man, Baba, constructed a public toilet, right? Public toilet. Worth, let's say 20,000. This public toilet that Baba has constructed, we are going to compensate Baba for the service that he is rendering to the public. Is that clear? So what will be the end? What will be the entries? How are you going to recognize it? We are not interested in this figure, but we are interested in what? The grantor. So in the books of the grantor, what is he going to do? What are you going to do? What is he going to do?
The 20,000 will be a liability to the grantor.
But the thing is, in the face value, the asset is still, the public toilet is still for government, or you don't know?
Yes.
So you will do two things. You recognize the amount as an asset, 20,000.
Okay.
Then you recognize him as what? Liability.
Liability, okay.
20,000. Then it will balance off. Is that clear? Is that clear?
Yes, it's clear.
Okay. Okay. Then what will be the measurement? The measurement will be this value or any fair value. Is that clear? The measurement, the initial recognition, okay, initial measurement, okay, will be the same amount of what? The service assets or the fair value. Is that clear?
Okay.
Then let me hit on this one. Then I close the chapter on this. Then I use the 1 hour left to do the theory part of the calculation. Upon recognizing this liability, there's supposed to be a financial, that was the question that dropped last night. They were told to explain this. There will be a financial what? Outflow, so financial model, FLM. The thing is not yours, but you have recognized the thing as your assets, and you have recognized same as your liability. So it means that they are going to pay a cost. Is that clear? As a form of compensation to who? So you have done the public toilet, you have recognized it as an asset.
Yes.
Recognize it as what? Liability.
Liability, 20,000.
20,000. So you need to pay compensation to what? Baba, public toilet, Baba.
Yes.
Exactly. So
Yes.
paying this compensation to Baba, okay, because upon paying this compensation to Baba, the cash, okay, so the financial model is applied when the grantor, okay, the grantor pays unconditional what is like when he pays an obligation or he pays cash for the asset being constructed by who? By who? Baba. Is that clear? The financial liability, the outflows, the monies, the cash being paid to Baba becomes what? Becomes what? The financial model.
Liability. Okay.
Is that clear?
Okay.
Is that clear? I hope.
Yes. Yes.
The monies, the payback that you are going to pay to Baba becomes what?
To Baba.
Financial liability what model.
Model. Okay.
Okay. Okay. Then, ladies and gentlemen, that was the question that dropped. And the last one was the grant of rights to operator model. They were told to explain that model. So now you catch the revelation for the first one. Is that clear? You catch the revelation for the first one. So here, the monies that you are going to pay for the said activity. Okay. What would be, I said that I won't explain, but let me explain that this one then. I'll close on that. Let's, under this model,
Please, please, so I'd like to know, is the recognition and measurement of the liability the same as the financial liability model?
No. What I'm saying is that here, down here, the grantor has recognized, we are recognizing liability. Okay. And we are interested in what? We are interested in the grantor's account. Here, liability will come when the operator constructs, develop the assets. Upon the development, that asset becomes a liability to us because we are using that asset to render service. So how do you recognize this in our books? We are going to recognize the cost of the asset developed by the operator as what? Liability. Then recognize same as what? Because in the face of, we know, people will say that public toilets, right? You get it?
Yes.
Okay, so we recognize same as what? Assets. But the financial model or the financial liability model is the compensation that you pay to Baba, the person who developed the assets. That becomes what? The financial liability model. Is that clear?
Okay.
Is that clear?
Okay.
So
okay.
in essence, the repayment of the 20K to Baba is the FLF. Okay.
Financial liability model.
Exactly. Do you get it?
Yes, please. Thank you.
So under the grant of right to the operator model, this is how this model also works. This is how this model also works. Okay, so but Babina is asking that, is it a form of salary? No. Compensating can be anything. Whether you are paying is like a public toilet, so or the G scanner or so on first scan. You can say that. Is that clear? Is that clear? Like how do I say it? The buying hostels in UG. If it's meant for 25 years, you can say that the person should take the money for 25 years. The 25 years, the money is now original, becomes what's the financial liability model. Okay. I think the explanation I gave, Krauss, it will suit under the grant of right to operate. So here, okay, the liability is being recognized. The liability is being recognized. Hello, sister. Okay, so sorry about that. So here, the grantor, before I add examples to it so that you catch a revelation, the liability is being recognized. We are still under the grantor, the person providing the assets. Liability is being recognized in accordance to the unearned portion of what? The revenue arising from the exchange of the assets. Okay. Okay. So here, the liability is recognized in accordance as the unearned portion, okay, of the revenue. I'll add examples so that you catch it. Revenue arising from the exchange of the assets between the grantor and the operator. Let me explain. Here, we recognize liability in accordance as the unearned portion. So here lies the case. The operator has constructed, let's say the operator has constructed, so we are still using Baba, has constructed the same public toilet. Okay, and upon constructing the public toilet, the operator did not receive any payment from, so here, no payment from government, no payment to, government did not give any payment, no payment from government. And since there is no payment from government did not pay anything upon the construction, okay, then government will give the asset, the public toilet to, so here, the grantor is here. He did not invest anything. So here, government will give the public toilet to Baba. For Baba to use for, let's say, 30 years to recoup his what? To recoup his what? Investment. Is that clear? Baba to recoup his investment. So the liability will be on the unearned portion of the revenue. Is that clear?
Revenue on whose part?
The unearned portion of the revenue arising from the exchange. They're trying to exchange the asset. They're trying to give the asset back to government. So here lies the case. The total investment is 10,000 Ghana cedis. And we are saying that Baba needs to recoup this 10,000. Baba has recouped for, let's say, 30 years. Baba has recouped 7,000. So what would be the unearned? 3,000. So this 3,000, before we exchange the asset to government, the amount government will be paying becomes what? The liability. Is that clear? Someone should say I should come again with an example.
So, Oman, if I get you, I say now, if let's say Baba's investment is 10,000. So after 2 years, it's left with about 3,000 to pay back to Baba. So at the end of the second year, in the grantor's book, the liability to Baba will be 3,000.
Mm-hmm. So you are off.
Yeah, I finished.
Oh, okay. What I'm saying is that Baba has developed the assets. Upon the development of the assets, okay, the assets will still come back to government. Is that clear? So coming back to government, Baba did not take any monies from what? Government. For the and the total investment is 10,000 Ghana cedis. And we are saying that Baba should use 30 years to recoup this investment, 30 years in this investment. Exactly. Is that clear? Upon the 30 years, Baba has been able to recoup 7,000 of the investment. How much left?
3,000.
3,000.
So this payment that we're paying will be what? The financial what? Will be the financial what?
Liability model.
Liability on end.
So the left amount left becomes the on-end portion of what?
Revenue.
Yes, when we try to exchange or to give the asset back to government, the government has a liability. This 3,000 as a liability to pay. Is that clear?
Okay.
Is that clear?
Yes.
Okay. That's basically that. So the subsequent recognition will be under what? Contingent liability and the rest. Do you get it? Because we need to book it. We need to make provisions. Is that clear? So the next recognition will be under what? IPSAS what? 19. Is that clear? Is that clear?
Okay.
The next recognition, we need to make sure that we make provision. We make either provision is made, contingent liability or contingent asset. It can also be done under IPSAS 29 or IPSAS 30. This is the subsequent recognition. So ladies and gentlemen, thank you very much for this aspect. Read and around the recognition of revenue and its disclosure. I will still revisit it in the course of our revision class. I'll still pull a question under that as part of our revision class, which is very probable. Okay. Okay. So what is it saying that the amount Baba will recouping is an interest portion attached to, no. We are not making profits. Okay. So since we are not making profit, okay, it's a PPA arrangement, but in the mindset of government, it's not making any profit. Exactly. But to you, it will say, it costs this, but in your eyes, you have a profit in your eyes, but to the government, it's not any profit. So they are telling you that recoup your investment, but they won't tell you to lose any amount of your investment. But the amount you couldn't recoup in the space of that years being given becomes a liability that government needs to recognize. That's basically that. Any question?
Okay. Okay.
Any question? Any question? If no other question, can I get yes?
Yes.
Can I get another yes again?
Yes.
Okay. That part.
Sir, please, can I see the screen before you scrolled?
Most of the times, this thing people they don't teach this part because of it accounting. But most of the time they don't teach it. So I've taken my time to look at it. But questions normally drop from their area. It's due.
Oh, okay.
Yes. April, it was IPSAS 30, IPSAS 32 na Gasa. They were asked to talk about, explain the measurement and the recognition of what? The standard. Last night, they were asked to explain financial liability model and the grant of rights to the operator model. That was they were asked to do. But now you have the basis. I think you are good to go.
Hello, Omar. I think IPSAS 30 talk about what?
I don't know. I don't know if that's 30. So go and check.
Hello, Omar.
Hello,
Omar.
Yes, please.
Hello, Mr. Omar. Please, I sent a message on the platform, but I think you haven't seen it. So my question is very simple. I was asking whether. Oh, sorry, I didn't hear it. Sorry. Okay.
Oh, ask.
Okay, that's fine. No, but I want to understand. I was asking whether the cost involved in the grantor, I don't know, with Baba establishing the asset. When you're recouping the amount, is there any interest to be added to the cost, or it's only the initial cost? Because 20 years from today, the amount will devalue.
Yes, that's
so
what
I was thinking probably there will be.
That's what I'm saying, that Okay, they are trying to recoup your investment. Investment can be your principal plus interest, exactly, irrespective, but you're supposed to give government an amount. Okay, that amount will be, let's say, your investment that you want to recoup. Or in the face of the government, they will know that they are not making any profits. They are transferring risk to you. But for you, the private person, you are also not doing freebie. Is that clear? So you are in your head, you have added your destiny to it. So you value everything. Then you give it to them that this will be your cost for the 25 years you want to recoup your investment. Exactly. Exactly. For government, do you remember that I said PPP is what? A win-win what? Win-win what?
Situation.
No. I mentioned a certain word. A win-win what? A win-win fashion. Exactly.
Okay.
Asian, that is basically that. Someone was asking me if SAS 30. I don't know. I don't know if SAS 30. So go and check it. Okay, so let's move on. I think it's okay. So that is IFRS 9, right?
Yes.
Okay. Let's move on. If no other questions, let's start with the theory part. It's 7:30 now. I'm going to use 1 hour to kill all the theory part of the calculation. Upon killing all the theory part of the calculation, from tomorrow, we zoom into calculation. You're starting on, we pick a question. Then we are starting. Okay, ladies and gentlemen, so it means that I've given you 60 marks already. Do you know that? You guys have taken my 100 Ghana cedis, and I've also taken your 40 marks if I don't come again. Is that clear? It's a win-win situation. Yes. So now it's left with the calculation 30 marks and procurement 10 marks. So I'm done with 60 marks already. Mama Bukrana, you can pass. You want only 50 out of the 60. Is that clear? And you have also taken.
It's not possible that we can get all.
You guys have also taken my 100 Ghana cedis because I said I would take it from 28th May. Okay. So let's take a headway. Can I start now? Can I get yes? And then next week, Wednesday is my birthday. I have a public speech at a certain place. If class will come on, I will let you know. If it won't, I will also let you know. Okay. I will still communicate next week, Wednesday. Okay. So that is that. Can I get yes before I move on?
All right. Happy birthday in advance.
Thank you. I'm growing. I'm so many years.
You're not growing, yeah.
Okay. Any question? If no other question, 7:30. Can I move on?
Yeah, let's go. Let's move.
Baby now said no. What is no? No supposed to mean?
No, she said yes.
Baby now said no in the chat box. What is your problem so that we help you, baby now? Baby now, unmute and talk to me, please. Yo, right here. Let's move on.
I knew that.
It's not confirmed. The time is earlier, so I will see whether I will come so that we do some game missing. I will still communicate. Let's move on. Preparation of financial statement. Statements. This one will give you 20 marks. And this one will be your question number 2A. Question number 2. If they are giving you only financials, it will be your question number 2. But if they are adding a bit of theory, like the paper I wrote, they added a bit of theory. So the calculation was 16 marks. The theory was 4 marks. Okay, and the theory was also around accounting policies, how we account it, the same thing, no, but just a theory. Okay, let's walk through the calculation. Do you remember that I said that we do calculation for 3 sets of entity? The first one is what? The first one is what?
Central guidance.
And you remember that Roxanne I said Akufo-Addo, and Roxanne said what? That. So this one, we call it consolidated fund. We are consolidating all the funds. We are preparing financial statement for what? Government, central government. Next one, we do prepare financial statement for subvented or other covered entity. And you know subvented entities. Subvented entities are which entity?
Yes.
The last one is what? Local government. So last night, it was local government. Let me walk you through so that you yourself, you can do the analysis and tell me what will be dropping, as we did last night. Last night, everyone was saying this one was coming and came. April, inception of the 3 dates. April, it was a subvented question that dropped. August, it was central government. December, it was subvented. And this subvented was transport. This subvented was university. March, it was local government. So now, which one is coming?
Central government.
Central government.
Local government can come again.
Okay, if you say so, let's move on. But we will learn everything. Let's move on, brothers and sisters. Since you know subvented entities and other covered entities. Other covered entities will be the pure services. Okay, information center,
audit service,
on your financial statement. On your financial statement, those pure services, they do financial statements, right? These are the other covered entities. Is that clear? Okay. So brothers and sisters, let's start with local. I'm going to walk through the theories across board so that when you pick any question, we are zooming into them. What do we do? Under all of them, we do statements, listen carefully, statements of financial performance. And what do we do? All of them, I'm discussing all of them. 2, also do statement of financial position. The 3rd one, what do they do? They also do changes in net assets. And when it goes to the private sector, what do they do? Changes in what? Equity, right? Right?
Okay.
But here we don't do changes in equity, we do changes in what? Net assets. Then the next thing that we also need to do under this one, they also do all of them on. They do cash statement of what? Statement of what?
Cash flow.
Okay, PSAS.
Cash flows.
We almost started a program this that I've been told that. So always I tell my students that don't go for any exams without knowing cash flow. Don't go for any exams without knowing cash flow. So to baby, don't go for any exams without knowing cash flow. I've been told that. I started this new syllabus, and I'm going to do it with you. I'm going to solve, since I said I'll solve 12 questions, I'm going to solve 2 questions. Last night I solved 1. I'm going to solve 2 questions with you. Okay. I've been told that. The next one, 5. What did they do? They do comparison. All of them, comparison a budget and actual amounts. Which PSAS talks about that? PSAS, BB in the books more, PSAS 24. This one is also not based on any IAS. Okay, that the last one, 6 notes to the financial statement. This one I will share is autopilot across board. So I will share a document with you. Remind me that I'll share a document with you. How to prepare note to the account. It's just, you are just writing English. So it's autopilot, just autopilot. Just be writing them. If you are betting note to the account, you are just be writing them. It's autopilot. Is that clear? Is that clear?
Yes, sir.
Yes, it's clear.
Okay, so this is what they do for all the 3 of them. So the question that you are going to get under question number 2 is either it is from this side, this side, this side. You are going to prepare performance, position, and note to the account. Most of the times in the tab, performance, position, and note to the account and the tab. Okay, let me walk you through the structure. Let me walk you through the structure. So I'll first take consolidated. Consolidated fund. And when you say consolidated fund, we are doing it for which people? We are doing
Central government. Central government.
Central government.
Central government. So since it's for central government, this is the format. The first one is what? Statement of financial performance. Performance, eh? Performance.
Yes.
Under that, we have our note to the account very nicely. You do your this thing very nicely. You do your notes very nicely. Under the revenue section, your casano, you about to say, again, I'm kind. And of a casa, so my bonus and whiny. Okay. Under that, we do the first one is what? Direct taxes. Do you remember that when we were doing the COA? What is COA? You can tell me. What is COA?
Chart of account.
Do you remember that we walked through the element of that? Do you remember? Do you remember? Oh, don't mind me. Don't say sorry. Don't mind. Okay, do you remember? Oh, please talk to me. Do you remember?
Yes, and you said you elaborate more when we get here.
So this one will be note 2. Do you know the reason why it's note 2? It's note 2 because the note to the account will always be note what?
Note 1.
Note 1. But if you don't have note to the account, this one automatically becomes what? Note what?
Note 1.
So you put your figure there. And what is direct taxes? Direct taxes is the bulk figure. Listen carefully. You won't see direct taxes in those writing this paper for the first time. You won't see direct taxes in the financial statement or the trial balance. You will see types of direct taxes. So go and go all types of direct taxes before you come here. The next one is indirect taxes. Note 3. Go and also know all indirect taxes before you come here. The next one is what? Non-tax revenue. And what is non-tax revenue? Non-tax revenue, write it somewhere. Those writing this for the first time. Non-tax revenues are revenues, okay, or the IGFs received from subvented entity and local government. All revenues received from subvented entities, and the local government. Any a friend of non-tax revenue. The next one is grants. We have two types of grants. If you don't know, consult the oracles. Grant is grant. There are two. Shika, what are the types of grants we have? What are the types of grants we have?
Bilateral and multilateral.
And what is the multilateral?
The multilateral is from established entities like the IMFs, the World Bank, and those things.
And this one from select country.
The bilateral is what?
From sovereign state countries.
Okay. Then the expenditure section will be what's compensation of employees. And I've explained compensation of employees to you under the COA. See, one join a class now, so video. Compensation of employees. And I've shared with you on the platform. The chart, the new chart of accounts. Make sure don't go and do it, Baba. I beg. Don't go and do it, Baba. Upon solving practical issues, it will come by itself. Don't go and do it, Baba. I beg. Okay. Because by the time I'll be doing a baby, now I'm solving one question. We said that compensation of employees are the salaries and the allowances of what? All staff workers. Then we have use of account. Use of what? Goods and services. And we said that goods and services are any other expenses. Okay, those utility bills and the rest, name them. We have compensation, consumption of first capital. First capital. Some places to use here, fixed assets, exactly. It's the same thing as depreciation. That's nicely. Then the next one is interest. What is interest? Do you remember that I explained interest? Interest is finance cost. Okay, interest is finance cost. We can also have grants, which is what? Expenditure grants. Listen carefully. We can also have grants, which is expenditure grants. Is that clear?
Yes.
Yes.
We can also have I want to write everything here. We have subsidies cost. Do you remember? Go and check the CO, this thing that we did. The same thing here. Subsidy cost, 11. Can you put it here? I'm about next, so I'm continuing from this side. The next one will be social benefits. And you know social benefits. Benefit cost, 9C. The last one will be other expenses. An accountant for the miscellaneous. Is that clear?
Okay.
Other expenses. So the difference between the expenses and the way will be what? Net operating what?
Go back for us a minute.
Are you okay? Yeah, you take a snap. You screenshot it so that what does it? It'll be fast. I want to kill the theoretical part today so that tomorrow we take a question and we zoom into question and answer. We're not going to do any baby questions. We are going to zoom into typical practical questions. I hope it's fair.
Yes.
Baby questions, Diana. So start if you no questions, near answer. If you don't understand, we push you harder. We do this, then you'll be fine. So it will be what? The net operating result. And what is the net operating result? The same thing as what? Surplus, and all deficit.
Deficit.
So it can be a positive figure or a negative figure.
Negative figure.
Who don't understand up to this point? Who don't understand up to this point? The statement of financial position are the same. We are not going to talk about that.
They are the same like how? The same like this?
The financial position is the same as the financial position you know. Is that clear? It's the same as the financial position you know.
Okay.
Is that clear? Is that clear?
Okay. Yes.
Okay, so let's move on. I've discussed that, right? So financial position is the same thing. Let's do cash flow. Cash flow, listen carefully. Cash flow has 3 bases. Operating what? Activities, exactly. This one, we always do direct basis, direct method. We have operating activity. And what are the things you are going to see under operating activity? Listen carefully. Listen carefully. You are going to see all items in the statement of financial performance. Is that clear? I'm not going to give you any format.
Okay.
Listen carefully. All items in the statement of financial what?
Performance.
Which are cash based. Once I need cash, you don't do it. So what are the elements? You know the element already. Yes. So if it's revenue, it will be what? A positive figure. Is that clear?
Yes.
If it's expenditure, it will be what?
Negative figure.
Simple. What the way to trimmer? You can answer every question. Under investment activity, investing activity, it will be all PPE items, assets, non-current assets, all the non-current assets being purchased and a bit of current assets, not all, a bit. So if we purchased, it will be what? If purchased to be what? A positive figure, a negative figure, right? Money is
yes.
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 If it was sold, it will be what?
Positive.
Positive.
Yeah. Catch the revelation. So it will be meant for all of them, all the 3 entities. Okay. The last one is what? Operating what? Financing what?
Activities.
Financing activities. And what are the things you are going to see under finance? When you start solving the question, I'll tell you a strategy. When there's a cash flow question that is coming, don't just pull everything together. When you get a max. I'll tell you a strategy, don't worry. The financing activities, these are all borrowings. Okay, so it will be all the non-current liabilities. Listen carefully. All the non-current liabilities, all. And a bit of what? A bit of what?
A bit of current. A bit of current.
And if as loan received, if it's received, it will be what?
Positive.
Positive figure.
If as payment, it will be what?
Negative figure.
Negative figure. Who don't understand what we have done so far? Who don't understand? Can I get yes?
Yes.
Can I get another yes?
Yes.
Can I get the 3rd yes?
Yes.
Can I get the 4th yes?
Yes.
Yes.
The last one.
Another 5th one.
Yes.
Yes. Yes. Yes. Yes. Yes.
Okay.
And your birthday gift.
If the last year, let's discuss the format for. So now we have discussed the format for cash flow for all of them. We have discussed the format for financial position for all of them, because financial position is the same. Your net non-current asset, your current asset, your liability. But the latter part of equity will be what? Accumulated fund. So when you start solving questions, you see that the format, okay? You see the format, okay?
Okay.
But if we win time on Soya, I will give you another format. But basically, you get to know all this, so don't worry. Let's move on to subvented. Subvented or other covered entity. So now we are doing for only what? The statement of what? Statement of what?
Statement of financial performance.
Okay, because you have done the rest already. What is the format? The format here, it changes totally from the
Consolidated fund.
Consolidated fund, because these figures will be consolidated as part of them. So here, you know, subvented entity. What are some of the examples of subvented entity?
Energy commission.
Hospitals.
Universities.
Yes, those. So whenever you get a question and the question mentions, whenever you get a question and the question mentions the name of the entity, okay, it becomes subvented or other covered entity. And the examiner loves to drop questions around this area. Do you know the reason why? Do you know the reason why?
No.
The reason is that maybe you don't work in that entity, so you won't know their revenue source. Classification will become a problem for you. So most of the times, he loves to drop questions under subvented. So let's say a question drops under information department, and you don't work there. How will you know their internal generated funds? But I have a remedy for you. Didn't say amen to that.
Amen.
Amen. Jesus Christ's name.
The remedy will help you do classification. Don't worry. So let's start. Here we have our notes and that. So the first one will be what? GOG. Now, under revenue. Listen carefully. Under revenue. Under revenue. The first one will be what? GOG subvention. Listen carefully. Subvention. That would be note what? Note what?
Two.
Because always note one is what?
Close to the account.
Okay, the next one will be your internal generated fund, IGF. That is the revenue you have internally generated. Nice. The next one, we call it donation and what?
And grants.
And grants. Hello, Oscar. Donation and grant. And donation is donation, grant is grant. If someone donates something to you, it can be an asset, it can be cash, it can be anything. It can be kind or cash. Is that clear? It can be kind or cash. Okay. Then we get our total. Have you seen that? Have you seen the revenues? Those writing these people for the first time, have you seen the revenues? Yes. For the subvented, have you seen the revenues? Hello, have you seen it? Wait, there's such a good score. Yes. Expenses. Expenditure. Expenditure will also start with the same thing. Compensation is the same. Compensation of employees. Compensation of employees. The same thing. Nothing changes. 5. The next one was what? Goods and what? Use of what? Goods and what?
Services.
6. That one's the same thing. The next one was what? Consumption. Fixed capital or fixed assets, exactly. The next one was what? It's the same thing as depreciation. Do you remember? The next one was interest, which is finance cost. So here, we will jump from the grants, subsidies, and social benefits, unless otherwise you see them. If you don't see them, most of the times they don't. Grant, do you get it? It's government who gives grant to these people. Okay.
Yes.
We add our other expenses. Exactly. Unless otherwise, you see it in the question. See, bro, unless otherwise. Thank you.
So there could be donations there.
Yes, there could be. Oh, no, for grants, no, for grants, it won't be here. But for social benefit and other subsidies, you can see them sometimes. You see them in the question. But unless
Yeah, but
otherwise.
I'm talking about grants. You know, these people they can also give donations to other this thing.
So that one won't be a form of grant. We will classify it under whether a social benefit or a subsidy.
Okay.
So then end results nicely. Ezegoma.
Hey. It's okay.
All other issues still holds for statement of financial position, cash flow, and the rest. Can I get yes? Can I get yes?
Yes.
Yes, Someone.
Okay, so let's try. We still have 30 minutes. Let's try something. Okay, let's try something. Upon trying something, for the cash flow there, the same thing now, all items on. So here, the cash flow, this will be the items on what? The operating activities, exactly.
Operating activities.
All the items will be operating activities. Since we are cutting revelation, let's move. The last one is on local government, exactly. Is that clear? So local government, I won't duplicate effort. I will clean this and write local government on top. Yes. The difference between local government and the subvented entity is only this figure, the one I've just cleared. That figure, DOD subvention, here they call it decentralized feedback. Decentralized what? Decentralized transfer. And do you remember the assumptions around decentralized transfer? Hello.
Yes, sir.
There's a common fund.
Okay, so what is decentralized transfer? Write it somewhere. Decentralized transfers are all monies being sent from the GOG transfer under Subvented. It's all monies being sent from where? Government to the this covered entity. So the difference between the GOG subvention and the decentralized transfer is very simple. They are the same in context. Listen carefully. They are the same in context. GOG subventions are monies sent from government to support the payment of what compensation and what goods and services. Should I come again? Should I come again or you're okay?
Yes, please. Please come again.
What I'm saying is that when it comes to the subvented and or other covered entities, the GOG subvention that you see there, they are transfers or they are monies sent from central government, sent from Akufo-Addo to support the payment of what goods and services and compensation of these entities. Is that clear?
Yes.
Okay, when it comes to local government, the difference, the name will change from GOG subvention, all things hold the same. But the difference will be what centralized transfer or decentralized transfer, and not decentralized transfer. They are monies transferred from central government to support the activities of the local government, i.e., it can be district assembly common fund, it can be districts. Let me give you examples of that. Decentralized transfers are money sent from Akufo-Addo. Exactly. Decentralized transfer, money sent from Akufo-Addo to support these people. Example are, I'll talk about this one briefly. Then I think we are done with the theory. Then if time will just enhance me, allow me, I will give you a format, one format of what the note to the accounts, one format of note to the account. Then I said I will share it with you though, but I'll give you one format of that. Then we will call it an evening, and tomorrow we will start with practical issues. Practical issues. So example of this are district assembly common fund. And here, it is the duty of government to send 5% minimum and 7.5% maximum. That's what you need to know. In some typical question, they won't give you the clue. You need to know the minimum amount it is supposed to send and the maximum amount it is supposed to send. But sometimes it will be any figure you use, it will still balance. Of total tax revenue to the local people that MAE District Assembly Common Fund. Is that clear?
Yes.
Okay, so that is the caveat around that. 7 total tax revenue supposed to be sent to these people, District Assembly Common Fund, and it's supposed to be shared, okay, for the local people, and they have capacity, they have some factors that is being based on to share. I'm on Chenepe. If you have a district in, let's say, my hometown, in the village, you can't be sharing the same money with the district in Accra. No. They have some factors they base on to do what the distribution of the amount.
Population and other things.
Exactly. Sanitation grants. Don't go and classify this under grant. Listen carefully. Sanitation grant. Okay, government is giving this money to support them. It's being classified under what? Decentralized transfer. The next one, DDF. And what is DDF? District Development Fund. Is that clear? Is that clear?
Yes, it's clear.
Okay. Then name them. All the it can be goods and services. Listen carefully. If goods and services is a revenue being sent to them, It becomes what? Decentralized or transfer, is that clear?
Yes.
Okay.
Compensation of employees. If compensation of employees is also a revenue figure, it's classified under what? Classified under what? Okay. So ladies and gentlemen, this will be some of the decentralized transfer items we need to know. IGF, you know, IGFs are the internal generated something they generate. So what would be some of the internal generated fund? The tolls, the hawkers fees, name them. They are, yes, they are plenty. Donation is donation. Donation is donation. Grant is grant. Ladies and gentlemen, what don't you understand? And that what we have just discussed. This is the format. Just chigu trim. This is the format for the three. Under cash flow to the same thing. Under financial position, the same thing. Okay, let me do note to the account. Note to the account. All of them, they are the same. Note to the account. The first thing you need to discuss, which is note 1, we call it accounting policy. Accounting policies that is used in preparing the financial statement. So under the accounting policy, you discuss 3 things. The first one is what the base of accounting. So I'll give you a format. Only a 2 good 3. Why? Is that clear?
You
need to discuss the accounting basis. So here you are going to write English. What is the English? The government prepares and presents the financial statements on accrual basis of what? Accounting, in line with what? The accrual base of what? PSAS. They prepare the financial statement in line with what? Accrual basis. The next one, it will be what? Compliance with PSAS. The financial statement was in compliance with what? The acceptable framework, i.e. the PSAS. Is that clear? Is that clear?
Yes.
Then B, this one will be A. B, you discuss consumption of what? First capital. Fixed asset or first capital. What are you going to say here? You are going to write English. What are you going to say here? You tell them that all the non-current assets has been depreciated using, so I'll give you some games. You left this one from the question, you left this element. This financial statement was or were prepared in line with what, or were depreciated against this assumption. Assumption will be given to you in the question. C, valuation. This thing is supposed to be constant. Valuation of what? Inventory. How you value inventory. And I told you that we value inventory using 2 assumptions. Who can tell me? PSAS 12. So you tell them how you value inventory. We use 2 assumptions. The first one is what? If the inventory is being held for sale, or inventory is being held for distribution and consumption. You tell them how you did it. If you have exchange rate, D, you can also talk about what? Exchange rate. So here you are giving note to the account. Things you can't what? You didn't express on the financials. Talk about them here. And one answer. So I'll give you an autopilot format every blessed day. With a trust at this things, this one and this one, you will get it from the question. How you value the inventory. You get it from the question. Is that clear? Is that clear?
Okay. Okay.
If no other questions, let me walk you through the statement of financial position. Statement of financial position for all of them. So you start with your non-current assets, remember?
Yes.
Examples of non-current assets, PPE. Then you put it here. Equity investment. That is the investment, right? right?
Yes.
Then you get your total non-current assets. Then you come to your current assets. Name them: cash, receivables.
Yes.
Tell me some. All the current assets. All the non-current assets.
Inventory. Bank will be there.
Inventories. Prepayment. All of them will come here. Then the next one will go to your liabilities, right? Non-current liabilities.
Yes.
So here will be, if you get your total assets, will be liabilities and what? Liabilities and fund. It won't be equity, it will be fund. Is that clear? Is that clear? Okay, so all your liabilities will come. Then the fund, under the fund, these are the things you put under the fund. Under the fund. Under the fund, it will be your accumulated fund. Accumulated fund. Then the surplus for the year or deficit for the year. Is that clear? Surplus slash
deficit.
Surplus slash deficit for the year. And no another balance. And balance here. Whenever I solve any question, if it doesn't balance, you send the difference to me. If it's a central government question, you send the difference to Akufo-Addo. But if it's a covered entity, I will step in for the covered entity. If it doesn't balance, you send the difference to me. I'll send it to the said entity. So, ladies and gentlemen, this is the theoretical part of what? The calculation. Tomorrow, we start with central government calculation. Central government. I'm going to solve the questions in the document I shared with you. Without any much questions, my name is James Patrick Osaiko. For my friends, call me Omampeni. Have a blessed evening. What the make here? Before I will take, I know Omamunte before I will take you from the platform. What the make here? Simple. Thank you. Any question? Any question? Okay, I think the class has been fruitful. Let me close and go and sleep.
The liabilities,
liabilities. It's a normal liability, so that's why I didn't state them.
Okay.
Payables, loans, borrowings, and the rest.
Okay.